Hey everybody, this is Boris Schlossberg from our BKT Weekly Outlook. We're going to do it in two sections today. First, I'm going to focus on the calendar, and then in the second section, I'm going to focus on charts because we're going to be doing this a little differently starting today. Anyways, taking a look at the Forex factory calendar, I've only highlighted just the most important events of the week, and I think the key event, of course, of the week is all going to be monetary policy. We have RBA, monetary policy, BOE, ECB, and the Fed. So it's really going to be central bank week, and that's going to be the key driver of just how everybody postures, because I don't think anybody, of course, is going to change interest rates as we go forward this week, but it's going to be a question of what they're going to say about the future. Vis-a-vis the Fed, it's going to be the most important event of the week. Whether the FOMC statement hints at any potential future tightening is going to be crucial to any further dollar rally. Remember, the dollar has rallied basically on the idea that the worst in the U.S. economy right now is behind it, that U.S. data has actually been marginally better than the market expected, and that perhaps with oil prices a little bit lower, the Fed has more room to maneuver and could actually begin to increase rates to strengthen the dollar as we go forward. Whether that's going to happen or not is going to be a question in the FOMC statement as we see on Tuesday. Of course, we generally don't think the Fed has a snowball's chance in hell of raising rates before the year end, given the slowdown of the U.S. economy. But it's all going to be a matter of posture at this point, whether the Fed simply claims that they're going to have a hawkish monetary policy will probably help the dollar as we go forward. The other big event, of course, just before that is going to be the non-manufacturing composite index. That's going to be interesting to see just how weak services are. Services comprise 70% of the U.S. economy, so we'll have to watch that. Then, of course, we have the BOE. The BOE, I think, is going to be the most interesting central bank in many ways, because I actually believe that the Bank of England has the highest chance of lowering rates of any of the major central banks right now, because the UK economy is by far the weakest amongst the G4. And given the fact that the UK economy is essentially a hedge fund economy, very leveraged to the equity markets across the world, as equity markets across the world begin to come down and grind lower, the pressure on the Bank of England to begin lowering rates and try to rescue the UK economy is going to become enormous. So while they may not do it this month, I think there's a very strong possibility that they may hint or possibly do it before the year end. And that's going to be a crucial change of tide that I think is going to weigh on the dollar as we go forward. The ECB, of course, comes in on Thursday. And here again, very interesting. Despite the fact that the Eurozone economy has been horrid and the data has been very, very bad over the last several months, Jean-Claude Trichet, I think, is going to remain resolutely hawkish. There's very little chance that the ECB was going to raise rates any further, but he's not going to give an inch, and that perhaps by the end of the week may give the euro a little bit of a boost. It'll be extremely interesting to see if he's flexible enough at this point, and if he is sort of astute enough at this point to begin to hint that yes, tightening is pretty much done. And the euro, at that point, of course, if he does hint that, will certainly have further downside risks to go. Now, on the COM dollar side, the critical events this week are all employment-based. We have, aside from the RBA meeting, we have the Australian employment data, we have New Zealand employment data, and we have the CAD employment data. We don't have any calls on it just yet because there's a lot of pre-indicator data that we're going to be looking at. But generally, given the environment across the board, it's unlikely to see very strong employment data out of any of those countries. Any surprise to the upside, of course, will be a relatively positive shock. On the other hand, a negative surprise in Australia, let's say a second month out of the last 9 where you have a potential of a negative employment, will be detrimental to Australian dollar and probably will suggest that the RBA will follow the RBNZ and cut rates before the year end. Canada becomes an interesting question. It's going to be interesting to see if the rise in oil sort of offsets all the problems that you're having north of the border, south of the border with the United States. Again, employment expected to be up, but it's very problematic. 5K plus, 5K minus is going to be very interesting to see. If the employment again disappoints to the downside, Canadian dollar has further downside to go. So that's the calendar preview of our section. I'll take a look at the charts in part 2 of our review.